Students, this is me. My name is Johann Peterson, and I run a coaching institute here by the name of Essential Tutorials. This is on Gandhi Path West in Jaipur. I'm here to help you in your course of accountancy for the session 25-26. In my way of teaching, I'll be teaching first the essentials. So that will be all the basics that we need to know of this subject. While we move along, we may come across certain topics or certain questions which may have something beyond the basics. And after that, furthermore, we may also have certain discussions on some advanced topics. So, this is what we will be studying, and we will be following the CBSE curriculum. A book which we will be using will be by Professor D.K. Goyal. Let us begin. Our first chapter of class 11. This is the meaning, objectives, scope, and nature of accounting. So, in a general sense, accounting is done by business persons. And the reason for doing so is to find out what is the profit, what are the expenses, what are the incomes, etc. in business for the time period that we are studying it. And why is it required? See, every business at the end of the year, it wants to earn profit. It wants to also, when it has got certain amount of money, this money, where it is going to be utilized, whether it is bought some assets like a building, like land, it wants to know how it has utilized this money. So these are certain things which are done in business. These are certain transactions which are done in the business. At the end of the year or the time period which is being considered, the business person also wants to know how much it has left with itself, whether it used all the money or it still has something left with itself. Furthermore, this is also required when you want proof. You want to show that these are all your spendings of the business. So, all these accounts that you make, or the subject that we are going to study, where we are going to be making accounts, this is going to act as proof also in the court when it's required. Okay. So, the term accounting, let us define it. It is an art of recording, classifying, and summarizing transactions and events of the business which are financial in nature for the purpose of analyzing and interpreting the results to the end users. Okay, so it is an art of recording, classifying, summarizing transactions and events of the business which are financial in nature for the purpose of analyzing and interpreting the results to the end users. Let's understand this definition with the features of accounting. So the first point it says is it is an art. And when I say art, I can also say it is a science. So accounting is prepared or accounting is done by certain rules which form the basis of writing down transactions. Now, why will we say it is an art? So we are saying it is done by following certain rules. When I say we are following certain rules, we follow it in our own way. We are still following it, but we are following it in our own way. So therefore it is an art, because art means creativity. Why are we saying it is a science? It is a science because accounting is a well defined body of knowledge. This means that from before itself, we have all the rules in place. Things have been studied and we are following that. So it is just like science, where you don't sit and prove things each and every time you are applying science. So accounting is being done based on something which has already been set in place. So therefore it is both an art as well as science. So this is the first feature of accounting. The next feature deals in business transactions. So accounting deals in business transactions. This means for a business, there can be many transactions. Let's say there is a person who's doing business and he needs to, let's say, walk to his office. Now, in this process, while he's walking to the office, he is doing something related to the business just because he has to reach his office and then continue his business. So, this kind of a transaction or this kind of something that is happening related to the business will not be termed as a business transaction. Okay. In the sense that it is not directly linked to the business. Or let's also consider another example where I say there is a person who is withdrawing money for the business. The owner withdrawing money for the business. So in this case, what is happening? There is one owner who is for the business bringing in money. So this money that is coming, it's coming within the business. It is being used inside the business. So therefore, this will be a business transaction. Okay. Let's take the third point. Dealing in business transactions which are monetary in nature. Okay, so from the second point itself, we have derived the third point. The first thing which we saw in the second point was to make sure that accounting is talking in terms of business transactions. Once the business transaction is there, it should also be talking in terms of money. For example, the business purchases 400 square yards of land. Now, what is the usefulness of this? The first point is if a business purchases land, this definitely is a business transaction. But can I classify this transaction as something which is worth to be mentioned in my business? No. The reason for that is because I'm measuring this in square yards. We have to have, instead of this, we have to use something which is in rupees. We are in India, so we use rupees. So instead of square yards, it should be in rupees. So if I say business purchases land for 10 crore instead of business purchases 400 square yards of land, then that would mean that this is a business transaction capable of being written down in my books of accounts. So the first category is that it is an art and a science. The second classification or the second feature is that it should have business transactions. The business should be um, there in this, which is carrying out the transaction. Okay. The third point is that this transaction, which is carried out by the business, should be in a unit which is in rupees. It shouldn't be in any other unit. The fourth point or the fourth feature recording of business transactions. So when we talk about recording of business transactions, we record transactions in something which is a book called a journal. Okay. So we write down transactions. It's not just verbally spoken that this occurred in the business. We bought land for 40 lakhs or whatever. It is actually to be written down. And when we write it down, we write it in a journal. Okay. The fifth point, classification of business transactions. So now, after we have recorded these business transactions in our journal, these have to be classified. By classification, it means we are posting the journal entries into the ledger. Now, what is journal entry? So, all those transactions, the business transactions which we have spoken of, those business transactions, when we write them in a journal, we write them in the form of a journal entry. Okay. And these journal entries are posted. They are posted into something after this, which is known as a ledger. So this is the final place where we are going to write these transactions as of now. This ledger is also called an account. Okay. These are certain terms which you may find new, but just listen to them. When we deal with accounting in the later chapters, we'll understand them in detail. So this is just a process or the features of accounting. In short, it's like the whole story of what we are going to do in our class 11. The next point. The sixth point. Summarizing. Summarizing the business transactions. So summarizing means making a trial balance. This is again a new term. So what is a trial balance? By the name itself, it is saying these are some balances. So there will be some accounts which will have balances as debit balance, or some accounts which will have balances as credit balances. And when we write them down, it's like the amount which is left from every account at the end of the year. So that balance will either be as I said, a debit balance or a credit balance. And these two, when we total all the accounts having debit balances and credit balances, these must tally. So they should come equal. So that gives you a summary. That is the sixth stage in the as the feature of accounting, or you can say in the process of accounting. The next, okay, the next one, analyzing and interpreting business transactions. So, analysis and interpretation of these business transactions. Analysis means examine. So, what are we examining? Again, with what we were left off in the previous stage. So, we were left with debit balances and credit balances of certain accounts. Now, we are going to see and prepare something which is called a profit and loss account and a balance sheet. So, what does a profit and loss account tell us? This account tells us the profit or the loss in the year. What does a balance sheet tell us? This tells us the assets, the liabilities, the capital of the business at the year end. Okay. So this is telling us on analyzing these balances which we had got from here, on analyzing these balances that we have made a profit or a loss in the year, or we have, just a profit or a loss in the year. And we prepare a balance sheet which tells us what our assets are, what our liabilities are, and what is our capital at the year end. And what does interpreting mean? Interpret is to get as an outcome. Derive an outcome. So, what is the outcome? These are the outcomes. These are the outcomes. Either you made a profit or a loss. What are your assets? What are your liabilities? What is your capital, etc. at the year end. Okay. So, this is the seventh stage or the seventh feature of accounting. The eighth feature, communicating the information to the end users. When I say end users, that means all those people who are involved in this information, what this business has obtained by its year end, which we just saw in the previous point. This information has to be conveyed. This is what we are going to convey. Because accounting itself, we say accounting is a language of the business. So, whatever was accounted for in this particular year that we have spoken of, that we are considering this business to be running in that time frame, we have to convey all the information. And to who will we convey? We convey it to the end users. Who are our end users? It is the management, the owners, the investors, the banks, the money lenders, etc. Okay, so these are 8 features of accounting, and this covers up the whole process of whatever you're going to learn in class 11. Okay, so this is the basis of accounting, or the base on which accounting is done. These are all the stages that we have to do. Let's discuss the objectives of accounting. First objective is to have a systematic record of all business transactions. Okay, so everything in place, even things like a bill, a bill of some goods, purchased, or property papers of the asset. I would say, let's say, land purchased by business. So all these papers have to be there because it is a systematic record. We have done see these transactions because these are business transactions. So if we have purchased goods or we have purchased land in the business, we need to have proof of all the transactions. So everything in place is kept so that if later it has to be verified, it can be verified. The second, to find out, as we saw in the previous topic, which we were doing the features here, to find out the correct profit or loss. Third, to get to know the financial position of the business. So the correct profit and loss which we have to get is from the P&L account. We will see this later. This was point number 7 in the last topic. And through not point 7, that was, yeah, correct, point number 7. Even this next point, to get to know about the financial position of the business, this was also through the balance sheet that we prepare. Again, point number 7, which was discussed in the last topic. Okay. The fourth, to prevent errors and frauds. So at times, accounting is also thought to be done to prevent errors and frauds. See, if you write things down, there will be less errors because it can be checked again and again. So that's why recording of business transactions is done in a written way. So this prevents errors and frauds, which would otherwise go unnoticed. We'll write another one to help or to assist the management. Up till now, we've seen this term management, which came in something which we spoke of earlier also. So, what does management mean? Management is those people actually running the business. Okay. They are the ones who are actually making this business run. It's not the owner. The owner may be the manager, but at times it is that you hire certain people to run a business. So these are those people who are running the business. And why is it an objective of accounting? Because the management will take decisions like if the management sees that they are in a loss, if it's a loss situation, then what will the management want to do? It will want to cut down expenses. If it sees that it has earned enough of profits, will want to distribute bonus to employees or give dividend to shareholders. Okay. So this is another thing why we do accounting, because we get to know about some items which help in assisting the management. We'll talk about two terms used in accounting, which is bookkeeping as well as accounting. So when we speak of bookkeeping, bookkeeping involves the first four stages. That is identification, of business transactions, identification of business transactions again, which are monetary transactions, recording of business transactions, classification of business transactions. Okay, so it involves these four stages, which we just saw in the features. Now, what does accounting involve? Accounting involves the first four stages, which are these, which we have just spoken of, plus, which is the next stage, summarizing of business transactions, analyzing and interpreting business transactions, and communicating business transactions. So here, this is involving much more things. This is involving all those features of accounting. So accounting itself is involving 7 points. Next point. This is performed by a junior staff. Accounting is performed by a senior staff. Okay. The next point doesn't require advanced knowledge of accounting. So here, the bookkeeper, what I mean over here is the bookkeeper doesn't and here on the accounting side, the accountant requires to have specialized knowledge. Okay, the accountant is required to have specialized knowledge. These are few points which we must know for sure about bookkeeping and accounting. Nowadays, bookkeeping is undertaken via computers. Okay, the reason for that is the bookkeeper doesn't require analytical skills. Here, the accountant requires to have analytical skills. Okay, so these are few points which we must understand of the difference between bookkeeping and accounting. After this, let's talk about some types of accounting or branches in accounting. The first which we are studying is financial accounting. So here, this accounting is that which deals with recording of transactions. Now, when I say transactions, this means we are talking of business transactions. Okay. Recording of transactions to find out the profit and loss and the financial position of the business through the balance sheet. Okay, so financial accounting, it deals with recording of those transactions to find out the profit and loss and the financial position of a business through the balance sheet. This is done. This is done to assist the management. So all that we are studying is there to assist the people who are running the business. so that they run it efficiently. The second category, this is another branch of accounting which is called cost accounting. So this deals with the cost of the goods or the services the business is producing. Because a business can either deal in goods or it can also be a service provider, like a hotel industry or a telecom industry, like say Reliance. So Reliance is a telecom industry, it's giving a service to you. So what is the point here? This says it deals with the cost of the goods or the services the business is producing. It works on measures to see to no wastage of business resources. So that's the second classification of accounting. The third one, social responsibility accounting. This accounting, this deals with what responsibility the business is fulfilling towards the society. Okay. Why is it that the business has to do something for the society? The reason is the business is already getting money through the people, through the society. People are investing their money and buying products or availing services of the business. So the business person is supposed to give back to the society in return some benefit. This can be in the form of providing employment opportunities or saving the environment by planting trees, etc. Okay. So this the business is supposed to do. It's an obligation of the business. So being accountable this way through doing something for the society in return is social responsibility accounting. Then the fourth one, tax accounting. So this deals with This deals with the accounting done for tax purposes. Example, GST calculation. Okay, so at times a business is also concerned with calculation of tax. For example, goods and service tax, which is charged on a business. This has to be calculated. This is shown under tax accounting. We'll come on the next topic, which is the uses of accounting information. Who are the users of accounting information? All the accounting that we do, who is eventually making use of it? Those are the users. That is the last point when we saw in communicating the information of accounting to the end users. That's what we saw in the features of accounting, the last point, the eighth point. So, who are these users of accounting information? First are the owners. So, why do the owners need all the accounting information? That is to say, why do they need to know what all was done in the business during the time period that they are considering? So, the owners need to know if the business that they are running has made profits or no. That is to say, the owners will be concerned with knowing whether the business has made profits or no. And if not, if they have not made profits, the owners would direct the management to make changes in the functioning. Okay. So the business would be managed in a different way if the owners get to know that the business has not made any profits. So that's why this accounting information is useful to the owners. The second category, the management. Now, why is the management also going to be wanting to know all the accounting information? To be able to carefully see, the owners are sitting above the management. The owners are the ones who have actually put the money in the business. The management is that part of the business which is running the business. It is a few selected people who are running the business. So the management have to carefully analyze based on whatever data is shown to them, this accounting information, at what they have to do to make the business run better. So the management needs accounting information to be able to carefully analyze how the business would run better. It would use this information to better the business position. When I say position, it means standing. So we'll write standing instead. Okay. Now the next. Now these are who? These two basically, the ones that we have written on the screen. These are internal. Okay. So when I talk of internal users of accounting information, your answers would be owners and the management. Now let's go to some external users. The third point. Here we will write government. I'll just write it. Now, whatever we study henceforth, below this third, including third point, these will be external users. So the government needs to know the accounting information to see if the business is complying with the existing laws laid down. Okay. They also want to know if the business is paying its tax. So also for the purpose of tax. The next, money lenders. Now, these are those people who are lending money to the business. Why will they want to know? Now, this can include short term and long term. Short term means for a short period of time they are lending money, and long term means for a long period of time if they've given business any kind of a loan. So why will they need to see the accounting information? They want to know if the business would be able to pay off money to them if they further lend it money. Okay. So they want to know if they will get back their money, because looking at the accounting information, they can see if the business is earning a profit. So they can conclude that the business will be able to pay it off. And if they see that the business is making losses, maybe they study the business's accounting information for a couple of years and they see the business is making losses for many years. So then they will judge and they will not further lend money to this business. The next point, who else would be interested? Oh, we have employees. So the fifth is employees. They would want to know if they would get an increase in their salary. So, why would an employee want to know whether the business is earning profits in this coming year or it has earned in the past year? That is because they would want to know if there is any chance of their salary increasing. Moreover, they would also want to see if the business is providing a sum of money on their retirement. What do you understand by this? See, employees would also want to know if the business is, instead of providing, let's change this, let's say, is going to provide. A sum of money on their retirement. That is to say, on retirement, normally the company gives a provident fund. So that is only going to be possible if the business has enough of money to keep for now in this employee's name, so that when this employee retires, he will get a lot of money on retiring. Okay, next, the public. Why is the public again an external user of this information, wanting to know? Hmm. Public would want to know because it would give them a chance of employment. So the public is interested in accounting information, that is, if the business is earning good profits, so that it can decide if they will have a chance of getting an employment in this company or this business that is functioning. Seventh, social responsibility groups. They would want to know so that they can see if the business has given back to the society something in return. Now, as we saw, what is the business going to give back the society? It's always going to give back something like maybe an employment opportunity. Maybe they organize a blood donation camp where they help the society by gathering blood for people in need. So these are certain things which the social responsibility groups want to know, that whether this business is actually giving out a certain amount of money for such programs, okay, for organizing such programs. And that is all shown in the accounting information. Whatever is spent by the business has to be written down in the accounts that it prepares. So even such things like they have spent a certain sum of money on social causes, that also has to be mentioned. All right. So one point which we can actually write it down is these financial statements are normally prepared once a year. However, a business may, when I say business, it could be some manager in the business who's managing this business. He may want it prepared even during the year. Maybe once or twice, for the reasons of running the business more efficiently. Maybe there are some decisions which have been taken and which have to be checked whether they are going to be fruitful. So, how will that be known? You can't wait till the end of the year. So, it will be prepared even during the year if it is required to be prepared. So, that's why I've written that they are prepared even during the year. Now, when I say this, the financial statements over here, they mean all those statements which we mentioned, like the profit and loss account and the balance sheet. These two will be prepared during the year also at times. Okay. Another point which I would want to stress upon as we are learning is accounting information or accounting is done in a chronological order. When I say chronological, this means date wise. Therefore, if we are doing business transactions and we purchase goods, we purchase assets. Let's say goods we purchased on 1st of Jan. Some asset we purchased on 30th of June. Then we are going to write this in a chronological order. That means whatever takes place first will be written first in my accounting. We are going to write dates. So dates are going to be followed as 1/1/25, then maybe 15/1/25, then nothing else happened to be done after this. Straight away something came in on 30th of June, then that date will be written. So it's always going to be in a chronological order, that is date wise. Okay. Next. Now, some advantages of doing accounting. The first advantage helps in planning. So, accounting helps in planning. How? We just spoke about something like this. We said management is there to take decisions which will make profits better, which will show the proper use of resources. When I say resources, it means raw materials. Okay. So it is, in one way, what is it trying to do? When we are writing things down systematically, we are writing things down systematically. We are writing things down chronologically. Etc. This is going to help. It is going to help the management in making good decisions, making the profits better, making the proper use of resources. So, in turn, this is going to be useful in planning the business better. Okay. The next point. Accounting helps in comparison. So, whenever we do accounting, we are actually comparing with what? The current year's data with the previous year's. Okay. So we are comparing. And what do we do? Because of such comparing, we get to manage our business better. So this comparison can also be within the firm or within the same firm, I mean, or between two firms. Okay, so you can have an example where you are saying, maybe I'm using a certain amount of resources in one business and finding out how much profit I'm making. And at the same time, I'm using the same amount of resources in another business, another company, and trying to earn through that company, but the profit comes out to be different. So, what will be the factors that are causing this difference? So, an advantage is it helps you to compare because you can always be better. So, one business competing with another business can always do much better. Therefore, these reasons can be found out by comparing. The next point. Third point, helpful in legal matters. So accounting is helpful in legal matters. This means accounting acts as proof. I told you about this. So accounting acts as proof. Whatever accounts you make, they act as proof and help out in case of disputes. Let's say some business has made a court case. This court case may be for some wrong transaction which was done. So how do you defend yourself? You defend yourself by showing what has been written in your books, as whatever amount is written will be considered the valid amount because this acts as proof. So it helps in legal matters. Fourth, it is helpful in raising loans because banks provide loans based on your credit worthiness. And by credit worthiness, I mean your ability to repay. So it is helpful in raising loans because banks will give you a loan, or any institution, financial institution will give you a loan based on whether you are able to pay. And how are you going to show that you're able to pay? Through your accounting that you've done for your business, because that will show how much profit you've earned or what are your assets in your business. Okay. So these are few. Let's go to disadvantages also of accounting. So just like something, if it has an advantage, it will also have some disadvantage. So let's see what are some disadvantages of accounting. The first point, it depends on the personal judgment of individuals. Okay. See, what I mean by this is because sometimes businesses would value their stock at a higher price. This means, let's say today, if I have stock lying with me, if I have goods lying with me, and I want to sell them, I can assume that this is going to be sold for a higher price. So, whose judgment is this based on? This is on the accountant's judgment. So accounting also, it depends on the personal judgment of individuals running the business. Another example could also be, this is the first one, and the second is provision for doubtful debts. This means that at times we keep ourselves protected for certain mishappenings in the business. Let's say we know some people will not pay us money. So for them, we keep a certain amount already aside, and that amount depends on how much I want to keep. So let's say my wish is to keep 10,000 aside of my business, in my business, and not use this. Now, because I've kept aside certain amount, what will happen to my profits? Profits will show less. So in this case, this was because of my personal judgment. So this is one disadvantage of accounting, that because of my decision to keep more amounts aside, my profit showed up less. The next, fixed assets are valued at historical cost. Now, this means that whatever may be the fixed asset we buy, let's say we have bought land. Today we bought it. Today is, let's say, 22nd of March 25, and this has costed me 10 lakhs. The more the value of this land changes, say it becomes 15 lakhs. By this historical cost, I mean that when I write this land being bought by my business, I will write it at historical cost always, at whatever it has been bought. So in my books of accounts, in whatever I have been writing in my journal, it will be showing at 10 lakhs. The change in value due to the market. This is the historical cost on top, and this is the market value. The market value will make no difference in what is written down in my books of accounts. So then you can imagine this is kind of something which is misleading. I bought land, its value is increased, but still I'm showing it in my books at a lower value, due to which my profits would also be altered. So these things cause a problem. This is therefore a disadvantage of accounting. Next, affected by window dressing. First, let's understand what is window dressing. See, whenever we go past any market, we have showrooms. In these showrooms, what do you get to see from the outside? You always get to see all products displayed through the glass window, which are like the best products that they are selling. So these products are shown to attract customers to come inside the shop. After that, what the customer buys depends on him. But window dressing over here meant that you are altering the values to attract. And over here also I'll say attract customers. Or I will say banks. Okay. Or I will say investors. Now, how does this happen? Let's say I have a certain amount of profit. So let's say my profit has come out as 10,000. If I've made profit of 10,000 in my business and I want to expand my business, I will go for a loan to a bank. Will the bank give me a loan? Bank would think twice. Would say, okay, you're making profit, but this profit may not be sufficient to pay off my interest. So what will this business want to do? It will want to show hypothetical situations. Maybe it will show the profit, which is not correct. So let's say it is showing a profit of 1 lakh. Now, what will the bank say? What will the investors say? The investors will be more convinced. They will agree to invest in the business. So this kind of an attraction which is created through a hypothetical situation is called window dressing. And this can be done by crooked minded businessmen. That means those who want to get money and can go to any extent in order to get that money. So this can be a misleading thing because over here, what is happening? You're altering your accounts just to make your position appear better. And accounting information acts as proof. So therefore, over here, if they show it in such a way, it could be evident that they are actually in this position of making better profits. So this therefore acts as a disadvantage. Another one. Yes, a very important one. Omits qualitative information. So, what is qualitative information? When I say qualitative, it means some qualities of, say, employees. What are some qualities? Hardworking employees. These are good qualities. These are good qualities. What else? If you have employees who are hardworking, sincere, what are some bad qualities? Some bad qualities would be negligent or negligence or wasteful employees. So you can have people who are bad also. What is happening because of them? Let's say there are two businesses. The first business is this. The second business is this. The first business has good employees who are sincere, hardworking. What will happen because of them? Profits of this business would be high. Profits of this business would be high. What would happen in this business? where you have negligent employees, where you have wasteful employees who waste resources, profits would be less. Now, accounting is not concerned with qualities of employees. That is to say, at the end of it, these two businesses which are running, accounting doesn't take into consideration any of these factors. So, as you said, profits were more in this case, and in the second case, profits were less. So, if accounting is not taking into consideration these factors, and due to this, you are making less profits, isn't it a disadvantage? Because two businesses are running, profits earned are different because of these non common factors, and accounting is not taking into consideration such qualitative information. So, therefore, this becomes a disadvantage. We will stop over here and continue again. Till then, till then, go through all this again, understand this chapter, and share this with your friends. Help each other, and I will see you in the next. Also, do subscribe and like the video. It is very motivating to understand what you are thinking, and that is better understood only through your responses. So, kindly comment, like, subscribe. Thank you. All the best.